say we do move towards a no deal, what would the impact be initially on the economy and then on the pound?
Well, I think the impact on the pound would probably happen before the impact on the economy. In fact, we're seeing the impact on the pound already. I mean, immediately after the referendum happened, the pound fell by about 12 to 15% or so. It's remained at those low levels. And over the course of the last few months, as we've seen the possibility of a no-deal exit increase, at least in the eyes of the markets, we've seen the pound have some very weak days as well.
Some said it was overpriced. Is that fair?
Well, it's very difficult to tell in the markets. The one thing I've learned over the course of my career as an economist is those who predict exchange rates inevitably get it wrong, and it's a very difficult thing to do with any accuracy. But certainly I think it's clear that the falls that we've seen in the pound over the course of the last 2 years are probably justified in terms of how the economy would perform over the course of the following years once we have left.
So more pain with the pound in the event of a no deal?
I think it's quite possible, yes. I mean, clearly, as I say, the foreign exchange markets like to get ahead of the news. So we're already starting to see weak days whenever it's clear that there are problems in Parliament. But I suspect we would see a continued selling of the pound in the event of a no deal.
In the event she gets her meaningful vote through the Prime Minister, which one has to say is unlikely, would the pound have a boost then? Would there be a fillip for it?
I suspect there would be over the short term. I don't think that the Prime Minister getting her deal through is the end of the story. I mean, some politicians have described it, in the words of Winston Churchill, not even as the beginning of the end, but only the end of the beginning. We would then need to go through the transition period. We would then need to negotiate a whole new trade agreement with the EU to take place after that transition period has taken place. And as a result, there's still a great deal of uncertainty. So there may well be a short-term boost to the pound after a deal coming through Parliament, but it's not clear that that would be necessarily sustained or where the long-term value of the pound would end up.
To the economy more generally, Mr McCafferty, just 2 months ago there was stress testing done, and the Governor of the Bank of England, Mark Carney, said that the system was strong. How do you respond to that, and how might that be altered by a no deal?
What Mark was talking about essentially was the strength or resilience of the banking system. And it's true that the Bank of England, working with the banks in the UK, has made sure that in the event of a disruptive Brexit, in the event of market disruption, sharp falls in the pound, sharp changes in market interest rates, that at least the banks have sufficient capital and sufficient liquidity to ride through those sorts of difficulties. So in that sense, the banking system does not face the same issues that we faced back in 2008, when faced with that market turbulence, we did see a number of banks fall over. To that extent, the system is stronger than it was, but that's not the same as ensuring that the economy is strong. There would still be significant damage and disruption to the economy in the event of a no-deal outcome.
Where would that damage be felt? How would my listeners experience it?
In terms of the business community, the first area would be in the sense of business confidence and uncertainty, and we're already seeing that. I mean, all of the surveys of business do suggest that they have lost confidence over the course of recent months as it's become clear that getting a deal is becoming more difficult, and that's manifest in terms of the rate of growth in the economy and in particular performance of business investment. We've gone over the course of the last couple of years from being the fastest growing economy in the G7 to being the slowest, and business investment for this time in the cycle in particular has been particularly weak.
But I read in the FT today Germany could be moving towards recession.
There are people who believe that we're coming close to the end of the economic cycle around the world.
And UK's posting, I think, 0.6 in the 3 months of September, wasn't it, of growth?
0.6, yes, and that's a significant slowdown to where we were only 2 or 3 quarters before.
But it was the strongest expansion since 2016. It's still...
0.6 on an annual basis is very slow indeed.
Yes, but it is better than it was in 2016.
Well,
whereas Germany seems to be going the other way.
Well, no,
there is that
actually,
argument.
The European Union has been growing rather more strongly over the course of the last 2 or 3 years. We've seen a pause, as it were, or a slowdown in Germany, France and a number of other Europe economies over the course of the last 6 months. There are some special reasons behind that, and I do think that the European economy will continue to grow at a relatively healthy rate over the course of the near future.
When the government talks about the robustness of the economy and points to, I think, almost record employment figures and sustained for, I think, the lowest jobless for, I think, around 40 years. Is that an indicator of an economist's strength?
It's one indicator of an economy's strength, and I think the fact that we have now seen unemployment fall to, as you say, the lowest level since the early 1970s has been something to cheer about, but it's been at the expense of very low productivity. One of the reasons that we've seen such a sharp rise in employment is that businesses haven't been investing in machinery, equipment and other capital. They've been investing in people instead, because people are more flexible. It's much easier for businesses faced with uncertain times to hire and then possibly fire if things turn bad than it is once you've invested in the capital, the machinery, the equipment, the trucks, whatever it happens to be. Once you've paid for that, you can't get rid of them. But at the same ways you can raise and lower employment levels rather more easily.
There's an extraordinary figure in one of the newspapers today. So Rocco Forte, who you'll know who he is, but to remind my listeners, he's chairman and chief executive of Rocco Forte Hotels, which is obviously a global company. He says that 94% of businesses in the UK do not trade in Europe. Would that figure be correct?
That is not incorrect, but if you consider that over 90% of businesses, if you take them simply as numbers, are very small businesses.
SMEs.
They are local hairdressers. They are local high street services. Of
we are a nation of shopkeepers.
Exactly, and of course hairdressers do not trade in Europe by definition. But in terms of output and in terms of employment, the amount of business that trades with Europe is much greater. I mean, 44% of our total exports go to the European Union, for example.
Lastly, you wake up on March the 30th, whatever it is, and we have a no-deal Brexit. What's the first thought that's going to go through, professionally, what's the thought that's going to go through your head?
Quite how bad will the disruption become? Because I think it is wishful thinking to believe that we could leave and without significant damage and disruption to the economy. Measuring that, getting the precise figures and forecasting that, of course, is extremely difficult. We've not faced this sort of situation in our lifetimes before, so forecasting it to the nearest decimal place is extremely difficult. But at the same time, I think it is wishful thinking not to believe that there would be damage and disruption, and trying to measure how quickly that would come through, how long it would last, and how big the negative impact professionally would be what I would be trying to do.